If you're a first-time private property buyer, this is a podcast for you. Hi everybody, welcome to a new episode of GetListed Podcast. So today we have prepared 10 things that a first-time private property buyer needs to know. So because I think this is a topic that is very important, because sometimes we might have conversation with our partner, say, hey, I think we have saved up enough, I think we are ready to buy a property. So the next step we do is to probably just scroll Property Guru, any portal that we have to look at potential property. But then buying a property is so much more than that. And we want to make sure that anybody that comes on board to get listed is very well taken care of. So here are 10 things that we stick to, and we want to make sure that all of you watching this podcast will benefit from. This is the most important because before we buy anything, we need to understand how the market is. So what's the market sentiment? A simple thing like interest rate or how the economy is running. So first, Joey, can you share with us the first point, which is understanding the property market?
So when it comes to buying your property, I think it's super essential to know what is happening in the property market and to fully understand the current trends right? So I think when buyers come and see houses, the first thing is they are very clouded by the idea that they want this to be their dream home. But they forget there's a lot more that goes into it, like whether it's worth of money. Worth of money? Is there a word?
Yeah.
Worth of money.
Worth your money.
Worth your money, whether it's worth the money, whether it's of a good value. So what we want to ensure is that our buyers buy a house that will help them grow their assets at the end of the day, right? Because at the end of the day, your real estate is supposed to increase your assets. Then you don't want to buy a losing property, nobody like to lose money. So you need to be equipped with all this information, like last transacted, how is the market going, to understand whether this purchase is the right one.
Okay, so for example, if today I'm a buyer, I call and say, hey Joey, I'm looking to buy a property, this is my budget. So you will not immediately recommend properties to me?
So the first thing I'll ask is, why you come up with this budget? Have you done an IPA?
Okay.
Yeah.
But I think even before that is really understanding like why are you even looking for houses in the first place or not? Like,
so why today?
Is it the correct time for you to be purchasing?
Like why now?
Like why now?
Like why now? Why now when everybody is very careful about entering real estate? So next then, what we mentioned, okay, now let's say assume that we already updated on how the market is, etc. So what's next? This is also very important, which is budgeting and affordability.
So usually when buyers text me directly, the first thing I'll ask them is whether they have done their IPA. Because this is the most important thing when it comes to searching for property. No point we go and view 10 houses and you cannot afford them all.
So what is an IPA?
In principle approval.
So basically an IPA means that you submit, you speak to a mortgage banker to get your loan assessed. Basically, let's say I want to buy a 1 million property, we can loan up to 75%, which is 750,000. We must make sure that minimally our income is able to loan up to 750,000. So from that, we are able to get firstly a verbal assessment from banker. Secondly, will be an official IPA by the bank. So with this, then we have more assurance. Today, I see this unit, I can buy.
Yeah, because I really had a friend who wanted to go and down pay the 1% for a 1.3 million flat. He was so confident, let's go and buy. And then when I talked to him, he was like, hey, I haven't done my IPA. Then when we do already, we realized that he cannot buy. So if he went ahead, right, he would have lost the 1% deposit in this sense, because he cannot exercise.
No, because for loan assessment, a lot of people assume that with their certain income, they are able to loan. Yeah. Confident, which they're confident.
I think one of the key things is, I think the previous time when the government announced the floor rate to use for the property loan calculation, right, is based on the basis of 4%. But today, we have to look at the real interest rate. How much are the floating rates? Like, it's probably about in the range of 4.2, 4.3. And what is the real floor rate that's being used by the bank themselves to actually access? It's probably in the range of 4.75. So a lot of these websites that some of the buyers go to, those might not be updated with all these new changes. And when they do their calculations, it's all wrong. And that's like the point where Joey is trying to drive at. Like when you try to do your own assessment, be it whether just pure calculation or trying to use online tool, sometimes it might not be the most accurate reference lah.
Yeah lah, but apart from that, I think there's also a lot that goes into buying a house. It's not just the 25% cash or the 75% loan that will be covered. Apart from the IPA, there's also a lot of extra cash they need to prepare. There are stuff like stamp duties, legal fees, and even renovation expense that they need to account for before they make a purchase.
Correct. So just now you mentioned that the maximum loan a buyer can get is 75% of the purchase price, or we call it valuation lah.
Yeah.
Valuation price.
Loan
So if
to
you were
value lah,
to
loan to
correct.
value.
So if you were to break down more clearly, is 5% cash, 20% CPF, and then followed by
Minimum 20%.
Yeah, minimum. Okay, I was like minimum 5% cash, minimum 20% cash or CPF, and then 75% loan.
And also plus all the ABSD as well.
Yeah, the
Correct.
stamp duties.
Stamp duty, and if you are PR, of course, you will be an ABSD foreigner.
Yeah.
There will be ABSD as
Yeah.
well.
Yeah.
Correct.
So I think it's not so not only about like what are some of the costs. Sometimes I think more crucial is actually the sequencing of all these different payment as well lah. Of course, some people can come out with the money, but do y'all have the time to actually raise all these
Funds
in time for the purchase as well? So I think not just budgeting, all this timeline planning for funding is also very, very crucial at this point of time.
Correct.
Yeah.
So for budgeting and affordability, we have an Excel sheet. I think maybe Darryl can share a bit on how our Excel sheet works and what the information we key in so that we can have a quick assessment at one glance how much our buyer can actually loan.
Okay, so at GetListed, we have this special spreadsheet that we can use to calculate based on your income, your age, and then with that we can actually look into what is your affordability to purchase a private property. So one thing that a lot of people, when they do their self evaluation on the online portals,
yeah.
when they want to find their own IPA, they forgot that there's this thing that might affect their loan assessment, which is actually their other loans that they're paying for.
Like your car.
Yeah, so for example, if let's say you have a car loan,
Yep.
or you have any outstanding credit card loans that is still ongoing, this will actually affect your borrowing.
So the key word is loan. So a lot of people have this misconception whenever we ask for your monthly expenses, a lot of people are counting this. Example, recently I met someone, so he told me the income is 10K. For example, when I ask for monthly expenses, he give me
Food, transport, money allowance to
give me
parents.
4K.
Wow.
So how,
4K for what?
then when that means 4K out of 10K
10K
lah.
lah.
So when I look at the loan eligibility, the loan is very low. Because if you guys know the TDS, total debt servicing ratio now is at
55.
55%. So which means if I use 10K at times 55%, I'm only left with $5,500 for my borrowing, right?
For your
Loan
monthly
assessment.
mortgage.
Then,
Correct.
Yeah.
then his spending is 4,000.
Then minus 4,000.
He can only borrow 1,500.
1,500.
To fund towards the mortgage payment.
Correct. So
Yeah.
that's when I probe more into it, and then I realized actually it's only $800 to $900 of car loan. The rest is just things like what? Insurance,
Grocery.
savings plan,
Family allowance.
family
Diaper
allowance,
money, milk
allowance to
powder money.
parents. So we need to be very clear. It's only loan only. That means
Things
monthly
that you have tied up with
repayment.
financial institution.
Correct. Unless when you buy a car, so example, Darryl used to rent out cars or sell cars. Both. Rent. So for car, but you buy cars also, ma.
Yeah, I do buy cars. Yeah.
So in terms of borrowing, there's actually two ways, ma. We can either borrow from a
from a financial institution like
Correct.
banks, or
Yeah.
you can go through a in-house loan.
Correct.
So if you go through an in-house loan, most of the time it will not reflect. When the banks do the loan assessment
when they
on you,
calculate your
yeah,
TDSR lah.
Also, they don't know that you own a car.
It's not that they don't know.
yeah, it's not because they are not linked to the banks for
Correct.
those in-house institutions.
Yeah.
Yeah.
So this is one way, but of course there's pros and cons to it
Yes.
lah. So the biggest difference is when you engage such a in-house loan, the interest will be
Naturally
Yes,
higher also.
it's
naturally
they are always
higher lah.
higher than banks.
But this is one way to push up your loan amount. Your loan amount. Correct. So I think here also mention correct. You also need to calculate things that is very emotional one. So just now what we mentioned is all the very
Technical financial.
financial, but there's also a sum of money that you will pay through emotion. What's that?
Renovation.
Renovation.
Yeah.
So when you're scrolling your property guru, you also must ask your partner lah, hey, how emotional we will be in this purchase, how much renovation we will be spending. So I think for our next podcast, we will have Darryl coming in to share about his own upgrading process. So Darryl, for your house, how much renovation do you spend when you bought it, when you move in?
So for my current one, we spent about 50,000.
The first one lah.
Just
Yeah,
for
The
context,
2-bedroom lah.
Yes, for my 2-bedroom unit. We
Then
spent about 50,000.
for your upcoming 4-bedroom?
Not sure yet. Still haven't collect keys.
Estimated. Minimally, how much do you think
I
you're going to
think
spend?
we comfortable with around the range or a bit more.
A bit more
Yeah.
lah.
60, 70, yeah.
But 2-bedroom 50k, 4-bedroom not 100k.
I mean, we don't know because this unit that I bought, right, is relatively very new.
Oh.
So that was one of the reasons why I bought that unit also.
So
Okay,
moving
Yeah.
condition was.
So
a
for buyers that are
important
actually
thing.
looking to buy private properties, right, sometimes if you see a very nicely renovated unit, even though they are selling higher, but you have to factor in that the cost they have put in for renovation. So when you buy the property, you might not have to spend so much to renovate instead.
Correct.
So for example, if the house renovation is worth 150,000, so but the asking price is only asking 50,000 above valuation.
Then I would say it makes sense. Yeah, exactly.
Yeah.
'Cause
If it's well kept lah.
Yeah.
If it's well kept. I think that pretty much covers our second point in terms of budgeting and affordability. Well, next thing, this one. Also another emotional factor. Location, number 3. So for location, I think it's something very subjective to everybody.
Yeah, correct.
Yeah, so some is for kids lah, some is for school, some is for parents. I mean, whichever reason lah.
So of course, I think one of the key things, especially for some of the home buyers that actually went through us to purchase, to look for a unit for their own land. I think the key thing is always about location to school. Especially today, since we are talking about first-time private home buyers, right? So I will assume most are actually young families also, and all this family profile, this profile generally covers quite a fair bit of families who have young children going to school or going to have children. So school is always one of the key considerations when selecting a property. So regarding property near schools, right? For us, what we notice in terms of trend is also this lah, that those property that are near school, generally they are very limited supply. Why?
Because they are studying, their kids are studying.
Yeah, exactly. Because kids usually, if let's say they want to ballot to the school, right? Usually they need to stay, they try to stay a few years at that location so that they can bid within the 1 km to school, and then they actually have to see their kids through 6 years of primary school education minimally, and that's why most of the home buyers actually staying within that kind of location, right, are staying there for long term, probably staying like maybe 6, 7, or even 8 years.
imagine if they have 2 kids.
Yeah, imagine they have 2 kids. Then
One primary 6.
Then
And
another one
another
primary
one.
1.
One 6 years old, one.
12 years old.
So it's actually 12
so
years.
the holding period for like home buyers staying near good school are generally longer also, which also means that supply, they are not so incentivized, or the desire to want to offload their property is actually not very strong. So, and that causes the resale supply within the area to be actually very low. So when supply is low, what naturally comes up? Prices tend to come up, right? So that is also like some of the considering factor. If you want, let's say, to buy near good school, you also must be prepared to actually pay the premium as well, lah. Correct or not? And then I think there's also something that location. Okay, so on just now that part also. So some people, right? I think I encountered one before. They say, actually, I don't need to be within the 1 km to school, because I'm alumni, I got special privilege.
Yep.
Correct. Then I share with him that I think yes, you're alumni. It doesn't matter to you lah. But have you ever considered since it's your first home, probably you might have this intention to offload in the future. Within 1 km, I think plays a very important role in helping you to sell your unit in the future also, correct or not? What is not important to you might be also be important to the potential buyer. Yeah, so that is also one of the consideration. Let's say if you intend to have to offload in the future.
Correct. So usually this is for alumni who are very confident that their kids very likely will go into the school. But there are also a group of buyers that are buying the location in hope that their kids can go into the school, because they are not alumni. Basically, they are of the different cat.
Yeah.
So, but usually for this group, I'll usually say it's not that.
It's bopa one
Yeah, it's not confirmed. It's not confirmed that
Actually,
you
to
buy.
add on, right, even just now when you mentioned alumni, right, so I've seen some of the very good schools, so even if you are alumni, but not under 1 km, right, you still need to go for bidding. Means you're outside of the 1 km radius.
Correct.
Doesn't mean you 100% will get
So
in.
the best combination is alumni plus within 1 click.
Yes.
I am a real life story. My mother was the number 1 ballot, and I stay right next to the school, and I still never get in.
Why?
I don't know. They never choose me lah. I stay next door.
Is it numbered something? I don't know.
I stay next door. The next block. Only. Like I can walk there.
You got a number 1 ballot, leh.
Yeah, number 1 ballot. My mother went to queue, take the first number.
You don't mind sharing what school? What school is it?
DeLaSalle.
You
all rejected me.
You're too good for the
Yeah.
school.
Too good lah. They
Wasted lah, the school didn't want you.
Which school do you go to instead?
I went to IJ.
IJ, very lucky school. Yeah. So, in summary, basically, in my opinion, never bet the entry for your kids to the school
Based on your home location.
Yeah, based on your home location, you will never know. But of course, unless your whole family stays in the estate, no harm staying there. But imagine if you're moving from west to east or south to north, whichever,
And still never get in.
And it's for that school, and end up you don't get in. Well, I don't know how.
Yeah, so just FYI, I think I actually tried to look up. You don't need to purchase that property to be within that 1 km. So sometimes, really depending on situation, I will ask my clients, since the school that you are trying to go for is so competitive, why not you try to rent? Because the worst thing is, if you rent, like you purchase that place, correct or not? I mean, you're already, number 1, paying a premium. Then number 2, your kids don't get to the school. Number 3, he's being offered a place somewhere very far away. This is like almost like 两头不着岸. You buy something expensive and then you still don't get the convenience of getting to the school that you want, and then you still have to hire a maid to go very far away to fetch the kids from school. So why not try renting instead? So this is some of the consideration. So another thing about location, I think it's also near to MRT station. Today's COE prices how much?
Very high.
Wow, this one I'm not too sure. I've never been.
All-time high.
It's been a long time since I hit into SG Kamat.
Because no need see.
Because I can never find the same type of car within the price range anymore. Because COE have went up.
Yeah,
So
they
much.
hit the all-time high. So actually now is a good time for people that drive to sell if they want to
So
make
I
a
should,
profit. Because usually you don't earn monies from cars.
Yeah.
Cars depreciate.
So this is a rare period that you can make from.
So I think what Zane is trying to say is because of the car prices now, more people are actually choosing their home nearer to an MRT station.
Not only that, because they probably also cannot afford.
Yeah, I mean,
Yeah.
it makes more sense to own a home than to own a car. It's better if you can find a home that is very near to MRT station.
Or amenities,
Yeah.
not just
Yeah.
MRT station. So either you are near to the school that your kids are going to, near to amenities, market, any other amenities, and then transportation. These three.
Because sometimes you must also consider, it's not just like for example the driver. It's not just you who gets the convenient mile. What about your wife? What about your kids?
Yeah.
They still have to take the transport.
Unless,
public transport.
unless all of them own a car.
Which is almost impossible into this context.
So I mean, if you hit all these 3 points, then it will be a generally safer purchase.
But that being said, if you hit all of these points, it will be so expensive to own a house there.
Yeah, you probably stay London already. You probably wish now to stay London.
Yeah.
Okay, so now that we've concluded 3 points, just to recap: number 1, understanding the property market; number 2, budgeting and affordability; number 3, location matters. I think next thing, this is a bit more, I would say, chim .
It's a heavy topic lah.
It's a little heavy, which is government policies. So firstly, I think like what I mentioned, sometimes the last time you bought a property might be 3 years ago, 5 years ago, 10 years ago. So I think it's very important for us to be updated with the latest government policies.
Firstly, you have to actually understand some government policy, most of the time we're actually referring to some of the cooling measure as well lah. So what I felt actually is most relevant to private home buyers is actually the LTV. A lot of people, when they look at cooling measures, LTV reduced from 85% to 80%. Wow, reduced from 85 to 75%. The amount of money that we actually have to fork out is very high. So I just want to do some explanation on what is this LTV about. So the reason for LTV, right, is actually ensure that in order to actually finance a private property, right, there is a heavy financial consideration that you have to actually make upfront. So in a way, it's actually increasing the barrier of entry for people to buy property. If everybody suka-suka can buy property without having any kind of commitment, financial commitment, then the market will become very speculative in nature. You agree with me or not?
Yes.
So by setting a high barrier to entry, actually it also provides, it actually ensures that people who buy really can buy, really have the financial capability to buy, and they will not suka-suka offload. Yeah, so it provides some stability to the market as well. So on that point is, some people also asked me before, why the LTV can set at 75%? What is the logic? It's because, have you ever considered, right, if let's say you were to loan 100%, correct or not? Loan 100%, let's say you buy something at 1 million. The bank loan you 1 million, correct or not? What if, let's say, property prices fluctuate and actually went down to 950? Actually, the bank loses money, right? Because they loan you 1 million and the property now only worth 950k. Is that a problem or not? So by ensuring that the LTV is actually 75%, even if the property is 1 mil, okay, the bank is only loaning you 750k. Even with fluctuation in property prices, right, there isn't a need for the bank to actually foreclosure the property, and that is also why so long as they protect the financial system, actually are also protecting the property market as well. Yeah, so the things that I share is very, very technical, but also know that all this government policy is actually not to make things difficult for buyers, but to ensure that the property market that you're entering is safe and also stable.
And most importantly, is also to make sure that all buyers are buying the property with prudency.
Yes.
So if you ask me what's the best thing about LTV, basically when I'm loaning 75% of the property price, right? My down payment is 25%. I'll be very happy to know that at least 25% of my money, which is let's say it's $1 million, your 25% is 250,000. At least I know I have 250,000 saved up in this property. So assuming I buy a 1 million property, I pay it off, okay, maybe for the next 3 or 5 years later, assuming, okay, appreciates to 1.1. I already know my 25% is there. Anything on top will be my profit, minus off my renovation, my interest rate, everything else. So to me, that's why I also feel that in real estate, especially in Singapore, it helps us save up. Because every property, okay, assuming 25% plus, like what I mentioned, capital appreciation of 100,000 is going to become 350. With 350 plus another 75% new loan, I can get a higher quantum property, which means that at the end of 65 years old, when I fully pay off my property, all this money is mine. So in Singapore, real estate is actually a form of savings as well, and how we build capital as we go. So to me, I'm glad to be in Singapore. Everybody, everything is about saving. Right. So next thing is about, this is quite interesting, property types, point 5.
Okay, maybe I start. Okay, so for property types, there's actually 2 kinds of private property in Singapore. We classify under landed and non-landed. So for your non-landed, they refer to your condominiums, your apartments, and then for the landed one is your landed property, and some of them could be your clustered landed.
Like townhouses.
Townhouse.
But resale EC also consider condo as well, right?
Yeah, so actually EC after 5 years, they are privatized, can be sold to Singaporeans and PR
as well.
Yeah, so they will also fall under the non-landed private residential
So
property.
but for EC, after they complete 10 years,
then
after
they are
collection,
open to foreigners as well.
Everybody.
Yes.
Yep.
So for
There's one more
non-land-
classification. Freehold and leasehold.
okay.
When it comes to
the
property
types,
types, which is
yeah.
annual. So there's a lot of different combination. You can be getting a condominium, which is freehold, or condo that is leasehold. Same for landed as well. We do also have 99-year lease.
Yes, I think actually a lot of people think that landed is freehold.
Yeah.
But there are actually quite a few 99 years lease freehold. 99-year lease landed as well.
And some also confuse like between cluster houses and also pure landed as well lah.
Yeah, cluster house, townhouses.
Yeah. So I think the main difference between landed and clustered townhouses is actually the clustered housing are actually considered strata.
Correct. Strata title.
Strata title. Meaning to say, there's some form of maintenance fees involved.
Just like condo.
It's just like a condo, but it's like a landed condo.
So
per se.
basically, landed living in the condominium facilities.
Yes.
That's why you need to pay things like maintenance fee lah. So I think the most important thing is when we are looking at such property types, is really to understand different property types have different trends, different costs, different trend, many different factors. Because some, example, leasehold, they have a different way of appreciating. For freehold, it might be a longer period to have the same profit. It really depends. So when understanding different property types, we can also have a clearer picture of firstly your entry, where are you entering in terms of the price trend, and then potentially when you want to exit, where will we land, and that's when we can make a difference.
Yeah. So let's say if a private property buyer, okay, first time. So let's say if they are buying their first, so how to determine what kind of property do they want to go for?
Okay, so usually when I talk to my private property buyers, I will always ask them this question: how long do you see yourself staying in this property for? So if let's say they say like maybe short term 5 to 10 years, usually I will recommend them to go for leasehold properties. Okay, the reason why is, first of all, if you compare leasehold versus freehold, usually for freehold properties there's an extra premium. Let's say if you purchase at the same time lah. So for freehold, it's usually about 20 to 30% higher. Yeah. So if let's say if you purchase a freehold, you are actually paying more upfront. And the trend for freehold properties is they will usually take longer time as compared to your leasehold properties to appreciate. So with a shorter time frame, if let's say they want to stay for 5 to 10 years, definitely leasehold gives you more opportunity to appreciate.
I think it's also what Darryl also mentioned is generally homeowners of this type of houses, 99-year or freehold, people who buy freehold tend to have the concept of doing legacy planning. They tend to want to hold this piece of property for a longer period of time, and that is where transaction volume for all this might not be that strong. Whereas these homeowners generally have the concept that they might just want to stay for a short period and then they will want to sell off. Volume tend to be higher, and volume plays a huge role in terms of appreciation, plays a huge role in affecting the appreciation rate lah, per se.
Correct. Because I think, example, let's say if I have a 1.5 million budget, I can afford either a freehold or a leasehold. So normally if you are a first time buyer, if they were to throw this question to anyone, let's say friends or family, should I buy freehold or leasehold? Same budget, same price, or maybe different location. Generally people will say, buy freehold lah, freehold better. You own that piece of your lease will not expire. You will not have that what's that called?
Government won't take back your land.
The lease decay. So government won't take back your land. So but the thing is, of course, like what I mentioned, if you really dive deeper into numbers, freehold is ultimately what we want at the end.
But it might not be the best if it's your first.
Correct.
Yeah.
It also depends on your age as well. Let's say, for example, today let's say we get married at 25, right? Newly married 25, 26, 30 years old, whichever. Just started a family, correct? Let's say you have a newborn. So the next factor to move will be primary school already, ma. So imagine you own a property freehold, assuming that you're going to hold a long period of time. But by the time when your kid reach 6 years old, you'll be thinking of one thing already. If nearby there isn't any school for my kids to go, what do I need to do?
Offload.
I need to offload law. I need to offload to the next property. By next year, I must move. But the thing is, maybe because of
Transaction volume,
the premium that it costs for
sometimes
around the area.
also could be the development size
Correct.
Yeah.
So usually we see freehold developments tend to be smaller. It's very rare to see huge freehold land.
Yeah.
Basically. So these are the things that we really need to take note of. And also just now I think we mentioned the difference between the types of private property. So condo, apartment, and also landed. So if you are a PR, first time buyer, you need to know, even if you have the budget.
You only can buy condo.
Yeah.
Correct. Because landed is only for Singaporean. If you are PR and you wish to get a landed property, you need to submit for LDAU approval. Correct. But of course, there are some strata landed, depends on the status of the...
Like they are within part of a condo.
Correct.
Yes.
If it's a strata within a part of a condo, yes, a PR you can buy. So very important, especially if you're a PR buyer. All right, now let's move to the number 6, hidden costs. So what are the hidden costs that buyers might not know that they need to pay for?
Okay, so
Maintenance fee.
there's actually
Maintenance fees
maintenance fee. Yeah.
is a very popular topic nowadays because they refund residences.
Yeah.
Right.
So for maintenance fees, it also varies. Example, size of development. This is the most important factor that will actually determine what is a maintenance fee. So basically, what does maintenance fee covers? It covers the building, cost of maintaining the buildings, facilities, facade, etc.
Upgrading of the facilities also lah.
Yeah. And then part of the maintenance fee also include this portion called sinking fund.
Which is for old properties lah.
Yes. So the sinking fund is just to stand by if let's say something is not working in a development. For example, if let's say the lift break down or they
due
need
to old age lah. Due to old age.
yeah, or the main gate spoil, that kind of thing. Yeah. So for big size developments, there will be more units. So actually more people will be sharing the cost of this maintenance
So it will split
evenly among
into more people.
yeah. Of course,
Based on share value.
based on share value,
Based on share
correct.
value.
So your size of your unit will determine what is your share value.
And your share value will then determine your maintenance fee.
Yeah. So a smaller unit will not pay as much as a bigger unit.
So just for reference, like what are the common maintenance fee that we actually can expect from, let's say, a normal condo vs, let's say, a mega development like Affinity or Riverfront? So if I remember correctly, most of the condo today, let's say if you are looking for a 2-bed to 3-bed, a normal condo probably in the range of 300-ish. Yeah, that's the normal pricing for a 2-bed.
For how many bedroom?
For a 2 to 3 bedroom.
two
normal
bedroom,
condo.
yeah.
But let's say if you were to go for some of the mega developments, right? I think the maintenance fee for 2-bed, 3-bed actually is very, very attractive. It's about maybe 180, 190 to
200
slightly more
plus,
than
yeah.
220. So considering these are coming from a HDB home, someone staying in HDB lah, how much are you paying for your season parking already? Probably in the range of 110, and then if let's say your conservancy fee, it is probably in the range of maybe $70, $80. So you add up, it's already about 100-ish, 180, 190.
Which is very
Very
close.
Which is very
to-
close to the maintenance fee. Plus, you stay in all these mega development, you still get
Facilities.
facility, mostly sheltered parking also lah. Yeah. So that's why a lot of people why they don't mind going to all these mega development, because they see actually the maintenance really makes sense for them also.
Yeah, as compared to those very small developments, like those less than 100 units. So if anything, because there's lesser units to share the maintenance, end up the owners for
Tend to
such
be
properties,
higher.
will be much higher.
Tend to be higher.
So I know some of those small projects, right, for like 1-2 bedder, they can be paying up to $400 to $500 per month. Yeah. So this is something that buyers have to consider lah when they choose a
Yeah, so don't just go to the unit when we go viewing, right? Don't just look at the unit. Oh, I like, and then commit.
You have to
Then,
understand
I tell
the-
you, then the monthly maintenance comes, then you shock.
So usually when we are bringing buyers to view the development or the condo, the first thing we will always ask, may I know what's the maintenance fee of this unit? So once we know the maintenance, then because it's sometimes very, very special one. Maybe 2 developments side by side. The buyer is choosing either one. Correct. But what is the deciding factor? Actually, it might be the
Maintenance fee.
maintenance fee. Imagine one is 500, one is 300. Which one will you pay for?
Because it's actually still considered one of the cost outlay,
Correct.
per month.
Correct. Okay, so now that we have covered the hidden costs, of course, hidden costs include other things like maintenance fee, like what you mentioned, property tax, sinking fund. There are also costs like legal fee lah. Legal fee usually depends between 2 to 4K. It depends which law firm you go to. Of course, we do our best to source for the law firm that is the most competitive in terms of pricing as much as possible. So
Yeah,
number
because
7.
not all law firms work with all the bank.
Correct.
Yeah.
So
that's
example,
also
if you
something.
choose a law firm that isn't within a panel of certain bank, then you got to pay extra. I think a few $100 difference.
Yeah.
Correct. Okay, so we move on to point 7, which is due diligence. Okay, so coming for a point of view of serving a buyer. So, I mean, this comes from my personal experience when I serve certain buyers or even for my sellers as well. There's one thing that a lot of people don't know. Okay, firstly, number 1, before you offer, you transfer the 1%, always ask for ownership proof. You need to know whether this is, when you go for viewing, the person signing for the OTP, is he or she the owner or not? So how do you actually check? You can actually purchase ownership proof on InLease. It's $5.25 lah. For now. Next year GST, I'm not sure whether there's any change. Then from there you have the property price and then you have the owner's name inside the property. But then of course usually the agent will buy lah because we want to make sure correct no? But if you are a direct buyer, you go and view the unit yourself and you purchase. If you skip this step and turns out that is not the owner,
Yeah. So there's
you did not do your due diligence
yeah.
in that sense.
I think Zacson also have personal experience, right? The other time when you saw a property, it was selling at a very, very, very attractive price.
Correct.
Oh yeah, the one he almost buy.
Okay. So basically this unit is at Criterion. Until now, I think if you go to Property Guru, is still there. One of the most attractively priced 3-bedroom in the market. So I cannot say that it's confirmed, okay? But why we didn't proceed to purchase is because the owner actually requests for a very high option fee. So instead of 1%, 5%, they're asking for like 100,000, 10%. Let's say 1 million, they ask for 10%, which is 100,000, which means 100,000 to owner. So in what scenario will a owner actually request for such high down payment? So there was only one thing that we can think of.
Bankruptcy.
Yeah, potential bankruptcy. So I'm not saying that this owner is going through a bankruptcy. I didn't dig further because it's too sus lah to me, a bit risky. I don't want my case to be I put 100k then end up it becomes a case and then it drags forever. So there's one more thing that you can do, due diligence, is to check whether if the owner have any pending bankruptcy. You can check. There's a website like you can contact any of us. We'll send you the link. So these two things is the most important: ownership proof, then bankruptcy check. So once these two is done, I think more or less safe. Yeah. So then of course, thirdly, one more thing. Okay, this is up to very subjective. Usually for your down payment, 1% goes to the owner. Correct. 4% you can choose to either go to the seller, or you can issue a cashier order or check to the seller's law firm under their holding account. So I personally recommend the second option, which is to give the seller's law firm so that they can hold the 4% until the completion of the transaction. So to me, choosing a good law firm to represent you is also a due diligence. Number 8, future development plans. Wow, this for Zane will be the one to explain this. He's super good at reading up this stuff.
Okay, so today what we understand is in terms of how the private property market is trending. Today, I think any home buyers who are looking to purchase something definitely pay one of the highest transactional price within their own cluster. So the next thing you want to ask yourself is, today if I buy something so expensive, what do I get out of it? Is there still potential for it to increase in value? So what are some of the reasons that will help a development to actually increase in prices? Transformation. So knowing where the transformation is happening, I think is very important, because these areas are where actually the government are actually pouring the money into. So money to invest. So I think a very good example will be the actually East Side transformation that I've been mentioning about in the area that I actually specialize in, which is D16. For example, in D16 itself, they are building Changi Airport Terminal T5. They are building, expanding the cargo area. There's a conference hall that they are building for business meeting, service apartment. So all these are actually translate to what? Job creation, correct or not? And job creation also means that there will be a large pool of people who will be working in that area, and they are looking for what? Convenience. So having all this transformation within where you are staying or close to where you are staying will actually ensure that your property that you purchase will continue to have healthy demand actually in the future. And that is what is going to help you to, okay, I don't say increase in price, but at least protect the price that you are really
There's
paying.
demand basically in the market, not just for resale demand, I think it's also for rental demand as well.
Correct. So it will be always easier to actually offload should you really need to.
Because for private property, it's unlike HDB. Right? For HDB, if you purchase a HDB today, regardless how old is it, the day you buy, upon completion, you have to restart a 5-year MOP period, which means you're not buying it for investment. You can't fully rent out the whole unit. Room rental is still okay, which means people are buying it for own stay. But for private, it's different. You can choose to either buy the property as own stay,
then decide to rent
out, or there might be a group of buyer is purely buying for investment, which is looking to rent out the property. So if you're buying a property that is near future transformation or any more job creation, that's when you know, I buy this property, I know for the next few years the rental demand is still going to be strong.
It is a safe purchase.
Correct. So you can cater to two groups of people. First, the people who are buying for own stay. Secondly, the people who are buying for investment.
So that's the beauty about actually for purchasing private, is the flexibility to decide whether you want to be your own stay or sudden change of mind, you want it to become a rental property. It can be done.
Alright, so I think, but there's one more thing that we didn't include in these 10 points, is a holding period for private property. So we mentioned if you buy a HDB, the holding period will be 5-year MOP.
You cannot sell within this 5 years.
You cannot sell within these 5 years. But how about private property?
So for private property, the moment you buy, you can immediately sell. Of course, there will be this thing called the seller stamp duty. If you sell within the first year, it's actually 12% of your selling price or valuation, whichever is higher. First year, 12%. Second year, 8%. Third year, 4%. And then after 3 years, you are cleared and you can sell it without any form of penalty. So I think having this seller stamp duty is also another kind of cooling measure, government way of preventing people from speculating and flipping property. So it's a way to actually stabilize the market as well.
Yep. So I think with this in place, it's also control the transactions within the development as well. Imagine if you have 10 friends, 20 friends staying in the same condo. So how can I make the condo's price go up? I just flip.
Keep flipping.
Keep flipping, make my transaction like crazy. So this is also to control transactions and also any forms of foul play to play with prices. So now, this one, important. Number 9, negotiation skills. So we are not saying that as a buyer, you need to attend negotiation course to become a powerful negotiator. But anyway, PropNex, we are all currently under PropNex powerful negotiators. So I assume that all of us here are good negotiators. So the only reason why you need to have a negotiation skill is basically to secure the best deal. So let me share with you, there's one way that you can actually roughly understand what is the buffer that is possible when negotiating. One way is to understand the first owner or basically the current owner, how much did they bought the property for. For example, if the listing is asking for 1.3 million, okay, so you shortlisted 2 units. Okay, so unit A, unit B, both asking for 1.3. You are hoping to land at 1.25 million. Okay, so property A is the owner that bought at 1.25. Property B bought a similar unit at 1.15. So which owner would likely reduce their price to 1.25 million?
Owner B.
Owner B,
yeah.
Because they have the buffer to do it. So, but for owner A cannot because they bought at 1.25. If they sell back at 1.25,
they probably still make a loss because of interest.
and they cannot even cover their stamp duty plus interest. So this is the way to really understand how much buffer we have, and that's the job that we will do for you lah.
I don't think this is public news, right?
I don't think they're able
buying
to.
price.
Because for us, of course, we have subscribed to certain research portals. We are able to go into
Specific
unit,
to look at the transactional
all the
history.
transactions or caveats done on the unit. Yeah, even for our company itself, we do have an app that can have access to this. We call it the Tower View function. So this is a tool that helps us to get the best deal possible. No point I go to a unit, I know very unlikely for the owner to reduce price one. Then I'll work on the other one to transact the lowest per square feet possible. Next one, our final point, resale potential.
I think this one is like a closing statement lah. It's like a sum of everything that we've said previously. So apart from buying property, we also need to think about our exit plan, right? Like what they said earlier about how long we are going to hold it, what price can we get in the future. That is also things that we need to consider. Like when you enter the market, when you are going to exit, be it 5 years, 10 years, 20 years, whether there is growth in the property is also very, very important when you're choosing one to buy.
Correct. So like we mentioned, whatever property we transact for you, when you engage us to search a property for you or to transact the property, ultimately one day you will need to sell. So when you sell this property, who will be the one selling? It's us lah, which is GetListed, right? So if we bring you to buy something that is not able to have a good resale potential, heading one is who? It's us,
Yeah.
Right or not? And you might not even look for us anymore because the property didn't grow over the years, man. So it's very important for us that all these 10 points must align so that we will have a very good relationship between you and us. Correct? So, any final points for our first time private property buyers? Anybody?
I would say for first time private property buyers, right, there are a lot of things that that you might not be familiar with, because who transact property on a daily basis, not them. So all these things they might not be very familiar, and that's why sometimes when they do it on their own, they might not have the expertise or knowledge to protect themselves, protect their own interests. Sometimes when they go for viewing, seller agent will of course say all the nice things to them to trigger their emotions. So that's why some of the private home buyers that we actually met up actually thought of actually engaging us as a buyer agent to help represent them in their best interest.
So it always feels good when somebody is on your side. Correct? Because the sellers engage the seller agent for a reason, which is to best represent them, and they only have one objective:
To sell for the highest price.
to sell at the highest price possible. But if you go in without a representative, which means basically you have to work on the highest price possible. But for our job as a buyer agent is to make sure that you pay for a fair price, or best, we can negotiate a good deal for you and pay under value as much as possible. Of course, we must do our best to work towards your interests. So I feel never go into a negotiation which is at your disadvantage. Always have someone by your side. Always have someone to fight for you or fight for your best interest. So that's the end of today's podcast. I hope these 10 points have actually helped you guys to have a clearer picture when you are looking to buy your first private property. Welcome to real estate. Firstly, you will enjoy this whole process, and hopefully one of us can be part of the journey. So if you like what we are doing, please subscribe to this channel, like it, share it to your loved ones, and we'll definitely do our best to bring up more contents like this to value add all of you. Thank you very much. I'll see you in the next episode. Bye.
Bye.
So it's damn awkward. So this time we
的时候
smile.
我们是看哪一个
看这个
Me OK
很烦的。
要看这个了吗
Am I still in the
All the
Zoom?
way 是看这个啦
I'm not in the Zoom already.